Welcome. In this video, ZBCN coin broke the downtrend. Does the attack start? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. It is quite common for price movements in the markets to follow certain patterns and technical structures. Downtrends, in particular, can be both a threat and an opportunity for investors. Because even though a downtrend shows that the market has been under pressure for a certain period of time, breaking this structure usually paves the way for a much stronger upside potential. In the current situation, we see a similar picture. The falling trend line, which has been putting pressure on the price for a long time, causing investors to see psychological resistance and causing continuous pullbacks, has broken upwards in an unexpected move. This breakout is a very strong technical signal that market sentiment is starting to shift in a positive direction. Such sudden breakouts usually indicate that traders can no longer resist the selling pressure, and the price rejects the downward movement. Breaking downtrends to the upside is a kind of signal that the selling in the market is coming to an end, and buyers are becoming stronger. In terms of technical analysis, such breakouts are usually a harbinger of a new bullish wave, because the retest after the breakout, that is, the tendency of the price to return and touch the old trend line again, is a confirmation. Once this confirmation is received, the likelihood that the rise will become much more accelerated and permanent becomes stronger. The current development is a perfect example of this structure. The price has strongly and decisively broken the upper band of the long-standing downtrend, which has demoralized many investors. The suddenness of this breakout is also remarkable. This is because such sudden breakouts usually indicate that there is a strong demand in the market and investors are taking quick action to seize the opportunity. If this is also supported by an increase in volume, it's an important sign confirming that this breakout is not fake and is based on genuine buyer interest. Now the price is moving in a very healthy technical way, because after such a sharp breakout, the fact that the price retraced and tried to touch the old falling trend line is both reassuring for investors and positive for new buying opportunities. The retest move often allows the price to continue its upward journey more strongly after testing and confirming this level. Therefore, the current pullback should not be considered negative, but rather a harbinger of a healthy rise. In addition, this type of structure has the potential to attract the interest of large investors. This is because institutional investors usually take positions based on clear technical signals, and trend breakouts are buying opportunities for them. The current downtrend break is an important structure that many investors see as a technical buy zone. This increases the likelihood of new funds entering the market and the price climbing higher. If the retest is successful, this level starts to work as a support, and the previous resistance level is completely overcome. In terms of investment psychology, such structures make sense, because during a downtrend, many traders lose hope and either close their positions at a loss or go into a wait-and-see mode. But once the trend breaks, these traders start to regain confidence and consider taking positions. This paves the way for the price to regain upward momentum, especially if the broken trend line is clearly visible on more than one time frame. For example, if there is a clear breakout on both the 4-hour and daily charts, this brings a much stronger bullish possibility. However, the retesting process is not only important from a technical point of view, but also from an emotional one, because traders are often hesitant to retrace after a breakout. But when a healthy touch to the trend line shows that this level is now working as a support, investor confidence is further reinforced. But we can't decide the analysis with trends alone. Let's look at other metrics. Stay tuned. Reading trend changes in the markets and positioning yourself accordingly is one of the cornerstones of successful investing. One of the most common patterns encountered in technical analysis is the falling peak and falling bottom formation. This pattern indicates that the market is moving in a negative momentum, with each rise weaker than the previous one, and sellers dominating the market. However, these patterns also have an end, because no trend lasts forever. Especially after a series of falling bottoms and falling peaks, a sudden and strong rise produces serious signals that the market is about to change direction. Such a scenario may be unfolding right now. Over an extended period, prices may have gradually declined to lower levels, encountered resistance at each attempt, and eroded investor confidence. During this period, the market becomes morally weak, investors remain cautious, and hesitate to open new positions. However, technically, this pullback process reaches a point of saturation. This moment of saturation typically manifests itself through a sudden breakout and a sharp upward movement. The current development aligns well with this description. The price has broken the long-observed series of falling peaks and troughs and has clearly surpassed the previous peak level. This is an extremely important technical signal indicating that buyers are now more eager and sellers' influence is beginning to weaken. Such increases should not be viewed merely as a short-term reaction. Especially the clear surpassing of the previous peak and the maintenance of sustainability above this level indicate that the direction in the market is now changing. At this stage, what investors should closely monitor is the price's next move. Because in technical analysis, a trend reversal is confirmed not only by forming a higher peak, but also by forming a higher low. If the price, after retreating from this high peak, finds support at a level higher than the previous low and resumes its upward movement from there, it means the downtrend has ended and a new uptrend has begun. The strong upward movement currently being shown by the price actually indicates a significant change in the market's internal dynamics. Breaking free from the falling peak and trough structure signifies a major transformation not only on the chart but also in investor psychology. In such reversals, the perception that the trend has changed emerges in the market, which in turn leads to more buyers entering the market. Especially when previous resistance levels begin to function as support, this technical structure becomes even stronger. Investors confidently open positions using these newly formed support levels as a reference. This enables the price to embark on a more stable and healthy upward journey. Additionally, there may be fundamental or news-driven developments behind this sudden rise. However, from a technical perspective, the break of falling structures and the price surpassing the previous peak to form a new high is often considered a reversal signal. At this point, the price forming a high-low as well indicates that the upward trend is now technically confirmed. Such structures typically attract not only short-term investors but also medium and long-term investors. This is because trend changes provide important signals for expanding or restructuring positions. The subsequent movement of the price that has formed a high peak is of great importance. If the price experiences a pullback from this point but the pullback is met above the previous low level, that is, a high low is formed, we can now clearly say that an uptrend has begun in the market. This boosts investor confidence. For traders who rely on technical analysis, this structure is interpreted as a trend reversal, and new buy positions gain momentum. Additionally, if volume increases accompany this phase, the sustainability of the upward trend becomes even clearer. Trend tracking in markets can be done more clearly and accurately, especially through specific indicators. One such indicator is the vortex indicator, which is highly regarded among investors. This tool is a technical analysis tool developed to determine the strength and direction of a trend. It provides significant contributions in analyzing whether upward or downward movements will continue. In the current market structure, the signals provided by this indicator reveal a positive and noteworthy picture. Currently, the blue line, which represents the strong direction, has clearly surpassed its counterpart and continues its upward trend. This indicates that the trend remains in favor of buyers and that the upward movement is continuing in a healthy manner. The indicator's current position is a sign of significant momentum in technical terms. The blue line's upward position indicates that the market is in a positive state. This structure suggests that buyers are dominant in the market and sellers are being forced to retreat. Additionally, this structure is not just a short-term signal, but can also be interpreted as the beginning of a larger long-term movement. This is because such indicators reveal not only momentary movements, but also how strongly the trend is continuing. The vortex shows us trends. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.